On today's show, you'll hear investor perspectives on the COVID-19 impact on the cannabis market. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. Cannabis is currently gaining regulatory approval across the U.S. The lockdown has declared certain sectors, including cannabis, to be an essential service. We have investors and startup founders describe the impact of COVID-19 on the cannabis market. I hope you enjoy this episode. My first guest is Tibby Erdely of Key Investment Partners. Great. So there's many sectors inside the cannabis space. Which ones are seeing the change, positively, and which ones are seeing the change negatively because of COVID?
Yeah, I think it's a tough time to be. So first of all, you got to kind of take a step back and understand that the maturity of the different cannabis ecosystems that exist today is very different across different states. A state like Colorado is at a much more mature phase than call it a state like Illinois. A state like Colorado, you've got a lot of technology behind the scenes in the dispensaries or that the cultivators or manufacturers of cannabis products are using. And that's enabling them to really find a way to still continue to get their product out to the consumer. In some less mature markets where business operations are a bit more archaic still today, they don't have a lot of technology. They don't have a big e-commerce presence or a platform to sell to the consumer online. You're seeing some of those dispensaries be shut down. So it's really a question of what type of sophisticated tools and software do you have in place today in order to continue to service the consumer. So what we've seen is that it's been a negative for certain retail shops. We think that retail will certainly have to change in cannabis. For those states that have allowed for curbside pickup or delivery, that's been great for those retail organizations. But it still doesn't change the fact that people aren't going into dispensaries and spending significant amount of time with bud tenders, trying to figure out new products and new categories. And that also then segues into a negative impact on certain brands. So if you're a up-and-coming brand in the cannabis space and you found yourself trying to launch a product in the middle of COVID, well, you probably found that you're having a really hard time getting your branding out there. It's notoriously difficult for a THC-related brand to go out there and advertise their product today. And without the word of mouth from bud tenders, you're not getting, that cross-category exploration that consumers have been known to do in the cannabis industry, where it's frankly a very fragmented space in branded products. For the branded products that have already gone out there and taken significant market share, that have brand equity and brand loyalty with the consumers, we're starting to see that those brands, because of COVID, are starting to pull away from the pack. Again, because the consumer is really kind of sticking to what they know in this environment, as they're not interacting with their friends as much, trying to try, the latest and greatest SKU that's come online. And as a positive, and you probably picked this up from what I was saying, sectors like e-commerce, delivery, technology, business-to-consumer marketplaces, affiliate marketing and advertising has been somewhere that we've seen a pretty large increase in the space. So really it's those tech-enabled businesses that we've seen a lot of positive momentum and acceleration in the cannabis space. Tough to be a plant-touching business or a cultivator today when it's hard to estimate what demand's going to be like, because if we keep going into the lockdowns or if the economy continues to suffer, farmers may be more encouraged to go plant a different type of crop on their land today rather than cannabis or hemp. So it's a question that it's hard to generalize any one subsector, because every subsector is very different as where they are as far as their maturation phase. But I would generalize and say that it's the tech-enabled businesses that have really kind of kept up with the times, if you will, better suited to make it through this type of environment that we find ourselves in.
And what new applications are we going to see within the sector coming up because of COVID? There was a shift in other areas to have a more secure supply chain, use more automation, and use more tools to work in a lockdown situation. How do you think that might come to play out in the cannabis space?
Yeah, no, I think you kind of nailed a lot of it on the head right there. Something that we're seeing right now is that, while it's already state mandated to have testing labs to, really ensure product quality and whatnot, you're starting to see even more demand from the consumer of wanting to understand where their cannabis is coming from, really understanding that it's coming from, a healthy environment, that it's being handled properly. Because, back in the day when people were purchasing cannabis on the black market, you really didn't know where it was coming from, who was handling it, if it was being cut with anything. So you're starting to see not only a shift from the black market more into the legal market because of COVID, you're starting to see a greater need and more of a want for testing labs that are specializing and call it pathogen testing. That could be, harmful pathogens to the plant itself or to the consumers. I believe that there's going to be a long-lasting shift towards curbside pickup and delivery. Frankly, before COVID, I had never even really considered the idea of curbside pickup. I don't know if you've been into a dispensary before, but it's quite a process. You have to go check in, show your ID. There's an armed guard. There's a locked door. Then you go into, the special room where they actually sell all the product, and everything is, handled one by one, customer per customer. So the idea that you could actually just pull up to a dispensary and, hand someone cash or look for a cashless payment option, and they hand you the cannabis and you leave without going through the process of actually being checked in, I think is pretty interesting. So I think that there's going to be a lasting shift towards curbside pickup. And again, you've also seen a lot of states which had previously not allowed for delivery, relaxing the rules and regulations around there. So ultimately, it stems down to making sure that the consumer is able to access cannabis in a safe, secure way. I think is going to be certainly one of the lasting, more positive effects that we have from COVID.
My next guest is Kim Rail of Azuka. Well, that's great. And there's many sectors within cannabis. Which ones were, positively impacted by COVID?
Well, that's a great question. So one of the things that we've seen at a macro level is just overall across all categories, cannabis retail sales have been steady through the COVID crisis. There was a kind of a stocking up behavior in March. There was a bit of a dip in April from normal, sales patterns. And then by May, sales were back at normal levels or even above. So, and most industry analysts expect that to continue. And that is despite the fact that, most retailers had to shift literally overnight to, curbside delivery. Bud tenders lost the benefit of face-to-face contact and communication with customers. And so all of those, in all of that adversity, the sector did do, quite well and has done quite well through the crisis. We're seeing some interesting shifts in category trends. So in recent years, if you looked at category data, you will see a lot of growth in the concentrates category.
Okay.
I saw this event called VapeGate in the industry where there were, some pretty serious, it created fear around the vaping category, unfortunately, because there are many, many good products in that category. We're not in that category in our business. But what we've seen from that is a shift, that plus COVID, which, obviously has a pretty unrelenting toll on people with compromised lungs. We're seeing an increased shift in consumer interest away from smoking and vaping. Now, those categories, I think, will always be strong in cannabis. But as we look at shifting consumer interests and look at shifting demographics, meaning new consumers who are not prior cannabis users coming into the sector as consumers, we're seeing an uptick in interest in the ingestible or edible category. And particularly for people who want to use cannabis either for adult use or for medical reasons, but would never want to smoke, would never want to vape. So we're pretty excited to be, in what, I think will remain the fastest growth subsector now, shifting away from concentrates. And there's going to be some interesting shifts even within the category of edibles and ingestibles. But I think this is going to be a category that will emerge post-COVID stronger than ever.
Oh, great. And so during COVID, what parts of the cannabis market were negatively impacted? What went down?
Interesting. There were a couple of pain points that really were, re-highlighted because of COVID. One is all of the CARES Act and the financial stimulus protections were basically not available to cannabis or cannabis affiliated companies. So the industry, did not have access to, for example, the PPE, loan program. So there have been, a fair amount of, downsizing and furloughs in the industry just to stabilize cash flow because we haven't had access to the economic relief. So that's been, a hit. In most states, I mentioned earlier that cannabis was deemed essential, but for retailers that were CBD only, like CBD only shops, those generally were not deemed essential. So those retailers in states where quote non-essential retail was shut or still may be shut down, those folks have taken a serious hit. The other thing that continues to be an issue on the CBD side of the industry is, the FDA still has not issued final affirmative ruling on hemp CBD in ingestible products. I fear that COVID will actually delay that action by the FDA. And I also think that Congress may step in directly and, accelerate the policy changes around hemp CBD and really push the FDA to implement the 2018 Farm Bill in the way it was intended to support the industry. So those are some pain points. There's one other that I will mention because I think that it's bad for the whole industry. And since COVID-19, there have been at least 64 companies that have been issued warning letters from the FDA for making claims that their product will, treat, prevent, mitigate, or cure COVID-19. And I think that's a real negative for the industry because it gives the industry a bad name. So I am a big fan of affirmative regulation, very responsible packaging and labeling. We need to put very high quality, our products are all triple tested. So I get frustrated when other participants in this emerging industry, and I really believe this is we all are going to win or lose together, right? Because it's a growing industry. I really want to encourage my colleagues in the industry to be responsible about packaging and labeling and not make substantiated medical claims. So those are some of the things that I've seen as a little bit of a challenge.
My next guest is Scott Greiper of Viridian Capital. So it was a troubling time for the economy as a whole, but inside the cannabis sector over the pandemic, the lockdown and so forth, some sectors seem to have been changed positively and some negatively. Which areas actually improved based on it?
Well, within the sectors of the cannabis industry, as we track it, there are 12 different subsectors. And those are agricultural technology, so the growing technology, the extraction, biotech and pharma, consulting services, consumption devices, which are primarily the vapes, cultivation and retail, which are the growers and the dispensary owners, hemp, infused products, which are all the brands, the infused drinks, the infused chocolates, physical security, real estate, software. Those are the different sectors that we track and have for the last 5 years. The flow of capital in and out of these sectors to get a real measure of how investors' flavors, if you will, have changed over time. What we saw during COVID was there was a more diversity of investor capital than what we've seen in the prior 5 years. Since we started the Viridian Cannabis Deal Tracker, tracking all of the investment and M&A activity, which was in the beginning of 2015, so we're in our 5th year, about 70 cents of every invested dollar has gone into cultivation and retail. The licensed growers, the licensed sellers. That changed beginning in March of this year and has continued to change. We've seen a lot more activity in hemp, as you would assume, with the passage of the U.S. Farm Bill in 2018, December of 18, which federally legalized hemp. There's been a massive explosion of licenses that were given out by different states to grow hemp, to process hemp oil, and to infuse it into a product. So that hemp experienced one of the largest increases in 2020 versus 19 in terms of investment activity. Biotech and pharma right behind it. At the end of the day, many people, including myself, view cannabis or hemp-derived CBD oil as medical in all of its forms. Whether you're using it in replacement of a glass of wine to kind of chill out and relax on a Friday night, whether you're using it in replacement of Ambien to help you sleep, or whether you're using it for true medical applications if you have epilepsy, if you have neurological disease, if you're using topical CBD oil to deal with the arthritis in your knees. People for many, many years, thousands of years, back to the Greeks and the Chinese, have used cannabis oils and cannabis in the flower state as a medical remedy, health, wellness, medical. So biotech and pharma bringing true clinical trials, true R&D to study the efficacy of the plant has really ticked up in terms of the amount of investment activity. And I'll finish up with software. With the explosion and continuing evolution of the number of legal states, whether they're medicinally legal or adult use recreationally legal, and commensurately with the addition of new licensed operators in those states, growing and operating larger grow facilities, larger manufacturing facilities, and larger dispensaries, you need traditional ERP, enterprise resource planning software, to run the business like every other business. So whether it's accounting, whether it's inventory management, purchasing, human resource management, more and more of these operators are embracing, adopting, and buying security solutions to manage their business. So that's one of the sectors that has ticked up as well in attracting investment capital.
And my next guest is Ryan Dean Hogan of Moda Ventures. Great. So let's talk about the different sectors inside cannabis and which of those got impacted positively and which of those got impacted negatively. Sounds like you were in the sector that did well, given you were online doing e-commerce, direct-to-consumer, and so forth. But which did not do so well?
Yeah, we were well positioned, like I said, to take advantage of the opportunities. And to give you just some metrics in our business, in Q1, we acquired about 50,000 new customers. In Q2, we exceeded that and acquired 62,000 new customers. And we had a record month in the month of May. So it was unexpected. It was very difficult to achieve that. But what we really saw is products, and again, we sell only CBD products, but anything related to immune support. So we generated a new product that had, it was an immune tincture. We added CBD to it. So really simple products that we were able to innovate really on the fly. Anything related to anxiety also performed very well. So really everything and every metric in our business was up. Where we did face a lot of challenges is our product costs actually increased slightly due to just needing to buy more stock and more supply. Now, we were able to sell through that inventory, but there were points where I think a lot of CEOs face this, where we were making sure we were insulated and well protected to make sure we could continue to ship orders, because that was a challenge. We're a US-based reseller. Our company is Canadian-based, but our operations for e-commerce are all out of the US. And we ship out of certain states that had some orders that if you were non-essential, you couldn't keep operating. So luckily, our suppliers were very hard, and we were able to make sure that not only we could continue to ship our baseline level of orders during that time period, we'd be able to ship the growth and be able to mold to make sure we'd be able to keep up with demand.
My next guest is Ford Smith of Ultra Native. What are other examples of sectors being impacted differently there?
You start to see these brands as a direct correlation to having the advantage kind of route to consumer by way of distribution through direct to consumer. You started to see the brands that had already locked those distribution contracts in place to really start to, see more significant growth. Those that were only selling into the dispensaries, they seemed to take a bit of a hit. All of a sudden they're pivoting, going, we should have really been focused on this for the past few years. Now, how do we actually get into that direct to consumer supply chain? So, I think you started to see this rush or this flood of these brands trying to access those different types of channels. And, most of them were just overwhelmed, and they were, thriving and kind of, they didn't really necessarily, not that I wouldn't say they necessarily needed to take on more brands. They just weren't taking on more brands at the time. I think that over the past few months, things have changed. Now you've got a much larger consumer base, being driven to the platforms. And so they're more inclined to broaden that menu suite, but like I said, the brands that weren't, currently using that type of distribution model, they were kind of out, stressed and running around trying to figure out what that was. So as a result, you started to see a few of these delivery companies kind of start to do white label models, whereas the brand would actually go and leverage somebody's previously existing technology. The brand and or dispensary leverage the logistics and the technical infrastructure to actually fulfill a last mile order and then start distributing through that platform. So I don't know the stats on it, but I would suggest that, a significant majority of all brick and mortar shops moved to some form of delivery service, over the past few months.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.